you know, welcome back. We'd love to sell you stuff, but this is all we've got. And they produced, at best, it was probably 20 or 30 coins at best. Maybe only 15, but and I said, look, they weren't the coins I wanted anyway, but normally when I go in, they have a lot more than that to choose from. So they were out of stock. And why were they out of stock? Not because anyone else is buying it, because nobody's bringing it in at the moment. The other place is a major gold and silver dealer in Switzerland. They basically sell new stuff. And the report I got from them, it was a couple of weeks ago, was basically they were on both gold and silver. They were literally overwhelmed and they had to order.
Silver stands as a cornerstone of the global industrial landscape, with a market value of around $1.8 trillion, reflecting its essential role across various sectors, including electronics and renewable energy. While silver's price is heavily influenced by broader economic and industrial cycles, it also acts as a financial refuge in times of economic stress. Unlike other base metals, silver possesses a unique dual identity, being both an industrial commodity and a store of value. This duality has led to renewed investor interest in 2025, particularly as macroeconomic uncertainties increase and silver continues to outperform many other assets. Its performance this year adds further weight to the argument that silver is not merely an industrial input, but a key player in the evolving global monetary system. Market analyst Clive Thompson has emphasized that silver remains significantly undervalued when measured against its historical relationship with gold. He references the traditional gold-to-silver ratio, which averaged around 17:1 for centuries, far lower than today's levels. Should that historical equilibrium reassert itself, Thompson argues, silver's price could rise more than fivefold from current levels. He also points to ongoing supply pressures and rising industrial demand, particularly from sectors such as electronics and solar energy, as signs that silver's upward momentum may not be short-lived. Thompson suggests that if the investment community begins to treat silver with the same strategic importance as gold, the resulting shift in demand could drive prices well beyond $50 per ounce, possibly leading to structural repricing. At a deeper level, Thompson warns of growing instability between the physical and paper silver markets. Large commercial players have increasingly begun to demand physical delivery on the COMEX, notably in 5,000-ounce increments, draining available inventories. Meanwhile, the scale of trading in the paper-silver market remains astonishing. Roughly 1 billion ounces change hands daily in derivative markets, while only around 830 million ounces are mined annually. This implies that more than 240 billion ounces of silver are traded annually on paper, a figure that dwarfs physical production and highlights the extent of leverage in the system. With paper-to-physical ratios now exceeding 350:1, Thompson sees a mounting risk that even modest increases in physical demand could trigger rapid and disorderly price movements, forcing a long-overdue reckoning between market perception and material reality. Now, we present the clips from Clive's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
So it should be moving above 40 and perhaps on the way to 45 this year, and within not too much time, a $50 is possible.
Yeah, my question about silver also, how big is the disconnect between the physical market silver and the paper market silver?
Of course, there are plenty of traders who are using the paper market, the COMEX, to trade silver, but we've seen in recent weeks unusual deliveries, or recent months, I'm talking about since the 1st of January this year, unusually high deliveries of both gold and silver, where people are saying, rather than rolling over their contracts, they're taking delivery of the 5,000-ounce bars. These are pretty heavy things and they're worth a ton of money. So it's not mom and pop taking delivery. So someone's taking delivery, and the more delivery which is taken, the less that paper market becomes liquid for those who want to sell short. Because if they're selling short, they're only selling short because they believe they can lay their hands on silver when it comes to deliver, or they've actually got it somewhere stored away. So I think that my feeling is that the paper market is getting thinner, and that might be a reason why the silver price is rising. Of course, I have no physical evidence of how big the shorts are. There's a lot of talk about it, but nobody's actually been able to pin it down. There's no statistic you go and look at and say, oh, someone out there's counted the shorts, because these shorts, they could be bullion banks, they could be hedge funds, they could be private investors, they could be governments trying to suppress the price. But none of these figures are published by anyone. Therefore, you can't actually know when you see the trading on COMEX or anywhere else how much of it is naked shorts and how much of it's covered shorts.
Yeah, definitely. What about gold-silver ratio? I don't know if you take that metric as an important metric. It's often considered as a key indicator. What does it tell to you today with the current levels between gold and silver, the ratio?
Well, historically, the ratio between gold and silver, we go back a long time ago, was something like 15, 20 times. I'll call it 17 times. 17 ounces of silver bought you an ounce of gold, or an ounce of gold bought you 17 ounces of silver. Now, very recently, a few weeks ago, an ounce of gold would buy you 105 ounces of silver. Overvalued. I think gold is undervalued given the growth in global debt. So I think gold undervalued. So let's just take gold at fair value, and we could have bought 105 ounces of silver. Well, if we were to get back to, let's call it 100 ounces of simplicity. If we were to get back to 20 ounces of silver, that means the silver price has to be 5 times what it is now. So you can see how far silver has to go to get back to some sort of normality. Now, I don't think there's anybody who realistically expects we're going to get back all that way back in short order, but there's a lot of room for silver to move upwards in the near term, and it could move a long way. And I don't know where the end lies, but I think we're north of $40 is where it goes.
Yeah, Clive, you often talk with the retail, with investors, with big funds, big boys, etc. So I want to hear, how are you? What is the current investor sentiment? What are you hearing and seeing? How is the retail looking at the financial markets going forward? How are the big boys looking here? What's the conclusion? How are we looking when it comes to the investor sentiment in the upcoming period, and of course at the current levels as well?
Well, I've got two sources which are in the business of gold and silver, which I look at. One is a shop which buys and sells gold, and so people do bring in their coins or their candlesticks or whatever they've got in gold or silver, and we're talking silver here. They can pick up the phone to me, and if I like the look of it, I might come in and buy it. You know, I'm a regular customer. I'm the first person they call. What I'm hearing from them is that there's very little coming in terms of coins. I mean, they've still got people selling their bracelets, which I'm not interested in that sort of stuff. But there's very little coming in the form of silver that way, because that's what I'm saying I'm buying. Is that true? I walked in there the other day without warning and said, "What have you got?" And they said, "Welcome back. We'd love to sell you stuff, but this is all we've got." And they produced. At best, it was probably 20 or 30 coins at best. Maybe only 15. But and I said, "Look, they weren't the coins I wanted anyway." But normally when I go in, they have a lot more than that to choose from. So they were out of stock. And why were they out of stock? Not because anyone else is buying it, because nobody's bringing it in at the moment. The other place is a major gold and silver dealer in Switzerland. They basically sell new stuff. And the report I got from them, it was a couple of weeks ago, was basically they were on both gold and silver. They were literally overwhelmed, and they had to order.
The global financial landscape appears to be approaching a major inflection point, with the long-standing fiat currency model coming under increasing pressure. A sudden reset, possibly sparked by geopolitical or economic shockwaves, is becoming a more widely discussed scenario among analysts. The growing momentum behind the BRICS initiative to introduce a gold-linked alternative to the US dollar, as US debt spirals well beyond the pace of economic growth, many central banks, particularly outside the Western Bloc, are building up their gold reserves in quiet preparation. The dollar's role in global trade, especially among BRICS nations, has already been cut by 2/3, and the broader move away from dollar dependency now reflects not just economic realignment, but a deeper desire for financial autonomy and sovereignty. Despite the perception that dollar dominance is insulated by U.S. geopolitical clout, Clive highlights that military strength and institutional influence are sending a different message, as rising gold prices are signaling a shift. Market behavior suggests that the foundations of dollar trust are beginning to crack, and the contours of a new financial order are slowly emerging. Technically, gold has re-entered the strategic playbook for many global institutions. Even banks that once dismissed it as obsolete are now recommending modest allocations, recognizing its value as a stabilizer. Some forecasts even suggest gold could reach $4,000, underscoring how seriously gold's resurgence is being taken at the highest levels of finance.
So, everyone who handed their gold, it was rather disappointed, because if you still illegally held onto your gold, you could have taken it down to a jewelry shop who would have chucked the gold coin in with the bracelets and things and probably given you a bit more than $20 that was on the face of it. Obviously it wasn't completely illegal to do that, but people could have had a lot more just before that currency reset if they hung on to it. So what's happening? It's going to come, but we don't know when. It'll be an unexpected situation, and when you know it's coming, it will be too late to buy any gold or silver or anything.
That's a good point, and you are 100% right over here. Let's include BRICS factor in this. As BRICS nations accelerate de-dollarization, is the US dollar dominance really genuinely at risk, or is this geopolitical posturing overblown? What is the real endgame here, Clive?
So, the dollar's dominance carries on, but it is a bit like a giant supertanker in the ocean. It's very hard to turn it around. But other nations are building their supertankers in their own way. And that's going to it's not going to happen overnight. It's going to take some years. And even when it happens, it still won't change the fact that oil and so forth is going to be quoted in dollars. They might say, we should quote it in renminbi, or perhaps the new gold-backed BRICS currency, or whatever they decide to bring in. What I think will happen over time is that at some point, and we're a long way from that, a new BRICS central bank will be formed. We'll call it the BRICS Central Bank. It might be headquartered in Switzerland, it might be headquartered somewhere else like Singapore, I don't know where. And that BRICS Bank will probably hold a certain amount of gold deposited by each BRICS member. And in return, each BRICS member will receive a certain amount of a global BRICS currency. And that BRICS currency will potentially be convertible at the central bank back into gold. But the nations won't trade in gold, they'll trade between themselves in the BRICS currency. And if there's a trade imbalance, then unless it's corrected, potentially the nation which has got the surplus funds will be able to, in some way, shape or form, ask for that to be changed in gold if they wish to do so. And things will start to balance out again, just as they did while we were on the gold standard. Trade imbalances were sorted out in a certain way. Either a currency would devalue, but of course, if you've got your currency, if the currency is the BRICS currency, that's not going to be the currency of any one nation. And if it's convertible to gold, it won't devalue.
Yeah, let's move to hard topics and actually continue this topic. If sanctions and trade wars fracture global supply chains further, could we see a return to mercantilism where nations hoard hard assets? How should investors play this shift?
Central banks, which let's say are not the super friends of the United States. One central bank which is rumoured to have a lot of gold, but says they don't have much, it's only about 5% of the 6% of the reserves, is China, which is a very low percentage officially, but unofficially it might be a lot more. I think all central banks know that if there's some sort of new system forced on us by a failure of the dollar, panic in the dollar, then those who've got the most gold will have the loudest voice, at any new system which gets developed. So I think nations are trying to build up their gold holdings, and that's partly a hedge against having all their assets in a currency which is showing, well, where the government is so far showing no signs of reining in the debt. I mean, everyone can see the projections from the Congressional Budget Office, which is part of the US government effectively, in which they forecast that the debt to GDP ratio will continue to rise. That means the debt is rising faster than the economy. To put that in a family context, is a bit like your credit card debt getting bigger and bigger at a much faster rate than your salary is growing. In other words, your ability to service it is declining. And that's what's going on with the United States, according to the official forecasts. And there are a number of things happening which could make that worse than forecast.
Yeah, let's separate here central banks and the retail. Central banks are hoarding gold, yet the retail investors are hesitant, I believe. So is this a sign of elite insiders preparing for a systematic reset while the public is kept in the dark?
Buy it and that sort of thing. Whereas the people I meet outside of in the street, and I meet a lot of people every day because I take my little boy to school and I meet the fathers and mothers who are there. For the most part, they don't really know. They don't really care. They couldn't tell you the price of gold. They couldn't tell you the price of silver. They don't have any. And it's not a topic of interest. Of course, the stock market is, because I live in Switzerland, there's almost nobody who doesn't have exposure to the stock market, and everybody's got some shares. It's just the way it is here. But you sort of try and move them over to the gold. They don't know how to buy it. They don't have any. They're not really interested at the moment. So I think that's not yet happened for the public at large. They're still looking at the stock market, and every dip, as they see it, is an opportunity to buy more stocks.
Yeah, let's listen to the other side of the story, the criticism about hard assets. Hard assets are often pitched as a hedge, but in a world of tokenized real estate and digital commodities, some say, or some ask a question, are the physical assets like gold and silver becoming obsolete relics for nostalgic investors? What would you say to them?
No, I don't think so. I think gold always had a place in portfolios, although for many, many decades, a couple of decades, it was almost zero. But I think it's coming back. I've seen a number of banks write to me and say, we're now moving gold into our preferred asset class, or we think the gold price will be higher. I see forecasts sort of moving towards the $4,000 mark. They're usually quite cautious,
Silver prices are widely expected to experience a significant upward trajectory in the coming years, with demand forecasts suggesting a potential increase of up to 170% by 2030. This surge is largely attributed to silver's critical role in high-growth industrial applications, including solar panels, electric vehicles, semiconductors, and next-generation electronics, all of which are expanding rapidly as the global push for green energy and digital infrastructure accelerates. As the supply chain struggles to keep up, any shortfall in physical availability could magnify price pressures. At the same time, in an environment of rising geopolitical tensions, persistent inflation, and waning confidence in fiat currencies, silver may increasingly be viewed as not only an industrial metal, but also a strategic financial asset. If investor demand intensifies alongside industrial use, this dual-force pressure could ignite a significant and sustained rally, potentially pushing silver far beyond its previous historical highs and re-establishing its monetary relevance in a shifting global financial landscape. Share your thoughts on Clive Thompson's analysis of silver prices in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.